Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of us is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And here I am recording this on Friday, March 8th in the evening after we closed at a price of $4.30 for the week, being down just over 6.5% on the day, and over the course of the week being down only 1.38%. And so here we are looking at the weekly candles, and this is actually the lowest close for a weekly candle that we've had since February 2nd over here when we closed at a price of $4.01. And so one thing that I try to remind myself of whenever we have red days, red weeks, is that, these are the dip buying opportunities that I'm going to look back on and wish I had snagged up some more shares at these prices. While it is unfortunate, I was hoping for us to be above $5 a share by now. I am happy that we still got a discount. And there are some things that I do think look pretty encouraging about the chart. One being that it does look like after these two green candles, these green weeks here, we have consolidated and we haven't dropped too much following this second green candle. And so my thoughts are that it's quite possible this could be some bullish consolidation before a move up, although these big wicks to the upside do suggest that it is somewhat bearish. It would be nice to be getting a weekly close above these prior highs, which we have not been able to see really, ever since we hit the high over the course of the week of February 16th, which was $5.05. We did hit higher than that, but we could not close above it. And so the previous week, closing on March 1st, we did hit a high of $5.10. But as you can see, we did put in an inverted hammer candle there, as well as for this week. So, it does suggest that, there aren't buyers up here. But, it's good for us because there are buyers down here, I believe. And so I do think that the stock price will be going higher. And before I do switch over to the daily candles and the lines that I've marked up on the chart, I did want to point out this article here that I found kind of amusing. And the headline for it is AMC stock 99% below its all-time peak and living below the 10-week line, a buy or a sell now? And so I find that kind of amusing because, why would you want to be selling a stock at a 99% discount? Why would you want to be selling it near the all-time lows of $3.58.5? I think that this is a good time to be accumulating, not selling. So I do think that is a pretty silly article. But anyways, I'm just going to switch over to the daily chart so we can look at some of the lines that I have put up here. And I do want to note this is the big red candle that we got for the day on Friday, March 8th, being down, like I said, 6.52% on the day. So not looking so great there, but I do think there are some levels that we are respecting that I do think is fairly encouraging. And so I'm actually just going to adjust this a little bit so we can see where all of these lines originate from. And so really, the thing that stands out to me is that, I just did this Fibonacci retracement from the low that was hit at the beginning of the week on March 4th, and that was at a price of $4.12. And then I took a Fibonacci retracement from that low up to the high that was hit on Thursday, March 7th, and that was at a price of $4.90. So it does suck. We could not hold above that level. We could not hold above this orange line at $4.81. But, from that range, I was able to draw this retracement. And I do think it is encouraging that we did close above the 786, which is at a price of $4.28.7. So we're just above that. And that line also does seem to coincide with this yellow dashed line, which is based on the low that was hit on February 13th, which was at a price of $4.26.5. And so we have had some wicks below that. We did get an open below that level on March 5th, so of this week, but we have not yet closed below it. So I do think that is encouraging. Also, I did add this uptrending line, which is based on the all-time low at $3.58.5, and then also with the low of the week, which was hit, like I said, on March 4th, being at a price of $4.12. And if I do zoom in on the chart, it does look like the low for the day of Friday, March 8th, does coincide with that uptrending level. So it is quite possible that could be acting as support. And I do think that it, is encouraging that we have not even had a wick below that level. So hopefully that continues moving forward. Hopefully the low for Monday is no lower than $4.26.5, or ideally no lower than $4.28.7, as I do think that would be good, suggesting that we are respecting these levels as support. And that we could be moving higher. But if we don't respect them, if we do close below them, I do think that could suggest that we will be seeing some further downside, which really just means more great buying opportunities. And so one of those levels is, the low that was hit on Monday of $4.12, which is just above this solid yellow line that I have marked here at $4.07. And that is based on the opening price that was hit on January 17th. We did get some consolidation around that level, and if I do throw up the volume profile, it does look like that is kind of like the last pronounced little bit of this volume lip or volume shelf there. So I do think that will be kind of a last line of support. But if we do break below that, I did add from this Fibonacci retracement the 1618 extension, which is down at a price of $3.63.8. So I hope we don't go down there, but I do find it interesting that that is at a similar price as the all-time lowest close, which was at $3.67. And that close was hit on February 5th. So I do find it interesting that those levels are at about the same place, but my hope is that we do not break below this white uptrend here. I hope that we don't get a lower price than $4.24, which was the low on March 8th. But if we do, these are some levels that might be acting as support, so I do think it's good to keep an eye out for those. But really, what I would like to see over the course of next week is reclaiming some of these Fibonacci levels to the upside, like the 618 at $4.41.8, or ideally getting closes above the 50% retracement, which is at $4.51. I do think it would be really good to be reclaiming $4.50, starting to move higher along this uptrending level. And also, it would be great for us to be getting back above 481, which does correspond with the high that was hit on January 22nd. Up here, we can see that wick there. And we did get a couple closes above that level here between, February 15th and 16th, but the 16th was just above that level, getting a close at a price of $4.83, so just 2 pennies above it. So it's kind of a weak claim of that level, and we did drop below it, did test it with a couple wicks to the upside, but could not hold it. And then we did get this blow off top on February 28th, which we could not hold. But that was when we did hit the high for, these run-ups that we've seen most recently, that high being at $5.10, where this green line is drawn, which does correspond to some wick lows back here, hit on January 5th and 8th. So I do think that is going to be a key level to get above. Also, this uptrending purple line corresponding with the opening price on January 12th, as well as the other pivot point being the high that was hit on February 16th. We did get a couple wicks above it, but we could not get any closes above it. So if we could start to see some closes in that region around $5.10 or higher, I do think that would be really good. And speaking of higher closes, if I do flip over to the max pain for next week, closing the week on March 15th, the max pain is $5 a share. which is, notably higher than current price. So, I do think it would be great for us to be closing above that, but I also should note that next week's Max Payne, next week's option contracts are monthly contracts, and those tend to be a little bit higher than, price that we see because they were placed, months previously. And so I do think it is quite possible we will close next week below $5 a share. But if we can reclaim that, I think that would show a lot of strength. But I should note that the max pain for the following week is $4.50. And so that is one other reason why I do think it would be really good for us to be reclaiming the 50% level here at $4.51. Ideally, getting some closes above that and working our way back up to close above these previous highs, like the high that was hit on Thursday, March 7th at $4.90, reclaiming that, getting 2 consecutive closes above that level with closes being higher than the previous day's high. I think that would be great, especially if those 2 consecutive closes were above $5.10. I do think that could send the stock price much, much higher. But one thing, I do want to point out before closing this video is that at the start of doing these videos weekly on Fridays, I did draw this downtrending channel that we had broken below, but we are back in that channel. That is where our current price action is. So as long as we can hold price above $4, or especially, above current price or $4.24, the low of the day, I think that is looking good. We are reclaiming higher levels. And so I do think that, the stock price will be moving up, and that red days, 6.5% down days closing at a price of $4.30, I do think before we know it, they will be a thing of the past, and we will be back in the 5s, 6s, and 7s. So, I'm trying to at least not let these discounts slip away from me. And so I'm keeping my chin up. I hope you are too, and I hope you have a great weekend. And I'm looking forward to stacking some more AMC next weekend at these discounted prices before they slip away. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.